And there we go. And we are almost ready. Hey, buddy, people coming, people coming. You ready to say hi?
Yes.
All right. So who we have here? Okay. Hey, I'm going to send you to bed. You keep making noise like that. That's uncalled for.
Okay.
Colonials here. Joshua. Josh, you going to stand up? Say hi to everyone?
Seek.
Okay. So who do we have this evening? Josh, Steve, Abe, Will, Mike, Michelle, Sam. You going to say hi?
Hi, everyone.
Hi, everyone. Rick, Rito, Marcus.
Hi.
Bearded Rat. Hi, buddy. Hey. Bearded, his name, Bearded Rat.
Hi, Bearded Rat.
Beard, a rat with a beard. What do
Name.
you? That is crazy. Hino, Hogarth,
Hi,
Bleed Blue,
Hi.
Joel,
Hi.
Auntie 18,
Hi.
Bobbert, Patty.
Hi,
Hey,
hi,
Casastra's
hi,
here.
hi,
Julieto.
hi.
I am fine. How are you? Hey, do you need to go to bed early? No. No? Where's your pen? Aren't you ready to do some work? Yes, Chris, how you doing? JR. Double M. Cool. Ab. Nub Sub. What's going on? What's going on, everyone? All right, so welcome to the chat. We're getting everybody here, reminded, all that kind of nice, neat stuff. Good afternoon, Casanastra. Hi, low. Where is it? Where was it? And where is it going? Absolutely. All right, good evening. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. I'm here with my little buddy. Little buddy, say hi, everyone.
Hi.
That's it?
Hi, everyone.
Hi, everyone.
Well,
Okay, everyone in the world. All right, so what we're looking to do here is we're looking at dividend stocks specifically for a simple, safe, predictable, consistent 1% per week. Now, the strategy came 15 years ago for my 9-year-old daughter. Well, she's 26, 27 this year. Can you believe it? My daughter is going to be 27. Holy cow, what are you doing? Oh, you dropped your pen. That'll do it. Okay, so that being said, let me just give you a brief story. We're going to bring up Auntie J. Hey, you want to bring up Auntie J?
Yeah.
All right, so we're going to get up the little right there. First and foremost, there you go. That's the website. This is the website right here, thedividend.com. You can book a call if you want to call and talk with me, blah, 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 all the kind of nice stuff. But what we're looking for, what we are looking for is go to YouTube. There's all the social media right there. We're going to go to YouTube and we're going to see J. Videos. Here we go. So we're going to go to the oldest video. There it is right there. And buddy, who's this? Who's this?
But I do. Being part of that, you're going to be getting
who's that?
weekly
Who's that?
stock trading, and every month
Who is
you're
it?
getting quotes of stocks that you
That's
can
Auntie J when she was little.
Oh, hi.
All right. So anyway, that's JC. Stop it, please. Hey, look. Who's this? Who's that?
Auntie J.
Who is that? That's me, yeah. Okay, stand in your chair. Yeah, that's my favorite part. Okay, so basically what you hear is that I've been doing this for a while. That's about 15 years ago. Okay? My 9-year-old daughter, back then, she wanted to learn how to trade stocks. Can you imagine that? She wanted to learn how to trade stocks. A 9-year-old little girl says, Daddy, what are you doing? Can you teach me? Well, how do you teach a 9-year-old how to invest in the stock market? We got people down here to say hi. Who are we going to say hi to? Who do we got? Who do we got? Who do we got? Natalie.
Hi, Natalie.
Hey. Stand up. Stand up. You look at the camera and then you speak politely. Say, good evening, Natalie.
Good evening.
Natalie. Natalie. All right. Who else do we got? Up, down, trader. Say, hey, up, down.
Hi, down, trader.
Who else? Natalie. Who else do we got there? Naz Red.
Hi, Natalie.
How long have I been in the markets? Almost 30 years. Can you believe that crap? Okay, Natalie, thank you. All right, so saying hi to everyone.
Hi,
So
everyone.
the video, look at me. Look at all that here. Look at it all. Oh, where did it go? Where did it go? Look, it's all disappearing, all going away. K-Tor, what's happening? Icy, K-Van, what's going on? Rochelle, what's happening? Jason, cook with chef. All right. So let's get to this. We don't need to show you. Oh, I just wanted to show you that. Greetings from Ontario.
Hi.
And it's Jessica.
Hi.
Jessica.
Jessica.
All right. Stinin, Camo, Truar, Carmel. How are you guys all doing tonight? Anyway, what we're going to do is we're going to look at some stocks you guys suggest and how it fits in the strategy that I want my 9-year-old daughter. Now remember, she's 9 years old. Well, 9 years old. She's 26 now. She's taller than me. She is. She started out big right here. Hey, what are you doing? You dropped your pen?
Yeah.
You're two kinds of crazy. All right, so who wants to look at something tonight? Who wants to be first? What stocks are you guys looking at? Now, you gotta remember, I'm looking for a simple, safe, predictable per week using pre-qualified dividend stocks along with stock options. C.A. Smith wants to take a look at Nike.
Hi, Nike.
No. His name is C.A. Smith. And he wants to take a look at Nike. Nike is NKE. So let's take a look at Nike. Okay, NKE. Here we go. Let's get rid of this. What is this? Delete that. All right, we don't need that. And we're going to be looking at January 9th. All right, so what's it? C.A. Smith. All right, so here's Nike right here. Are you going to help out or what? Okay. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. Look at the motion. Down, up, down, up, down, up, down, up. Check this out right here. The last 30 days. What's that right there, buddy?
A gap.
That's a gap. And what do we do with gaps? I love gaps. And the reason I love gaps, look at the last 90 days. The last 3 months. What are we looking at? What do we got?
A big gap.
Yeah. Got the high. Got the low. Okay.
No.
Where was it? Where is it? And where is it going? Down, up, down, up. Really? You're going to do all those little ones? All right, you do that. Big drop, then back up again. Check this out right here. That gap right there is going to fill eventually. It may be next week, it may be the week after, but gaps have a tendency to fill, which means down here, she's going to go up to at least 66 eventually. Is it going to happen this week, next week? Who knows? But the question you should be asking yourself is, do you like Nike?
Yes.
What stock is this? Gen Z. This is Nike. NKE. All right, we do it this way. Hold on. Okay. NKE. Otherwise known as Nike. Okay, get rid of that, buddy. All right. So, I like Nike. I actually have some. So let's take a look. Uh-oh. Tim Cook called the bottom. I have no idea who Tim Cook is. So let's look at the last 30 days and see what kind of play we could... What are you doing?
I'm going to do something.
You're going to do something. Okay. He's rearranging the furniture here. Let's look at the last 30 days, some kind of idea of what we think. So here's the last 30 days. Oh, Tim Cook is the CEO of Apple. Okay. But why is he calling the bottom on Nike? Okay, so here's the top. Here's the bottom. Here's where it was 30 days ago. Here's where it is. Okay, up, down. Now she's going back up again. Big gap here. Get rid of that stuff, buddy. Perfect. Well, one more. All righty. So, is it bouncing up? Great. Tim Cook is a board member of Nike. Okay, so I'm a little confused. And Nike CEO bought $1 million stock today. Well, hell yeah. Why the hell not? Think about it. Okay, so we're looking at 61.19. Okay, so the 61 is going for 106, and the 62 is going for 64. That's over 1%. So let's give that one a try. All right, so let's get rid of this. We're going to change it to a covered call, and then we're going to do a covered call at the 62. Now, the reason why I'm going to do the covered call at the 62 is because you having fun? Okay, here's the 62 here. Here's the current price. This is what we're going to buy it for, and let's see what kind of profit we can make off of this thing. All right, so the 62, right about there. One contract. Okay, you ready, buddy? Here he comes. Here, Johnny, buy one covered call of Nike. Okay, 9 January, which is next Friday. Now, the reason why we're not doing this week, because tomorrow's Wednesday. Okay, there's no market open on Thursday, so we have 2 days left, tomorrow and Friday. It's not enough time to collect any decent premium for the rest of this week. So we're going to go to next week, and we're going to look for at least 1.5% return. Okay, well, let's see what we got. So we need a calculator. That don't look good at all, buddy. Let's get rid of that one. We're not even going to do that one. We're going to change this to the 63. Okay, the 63 call. All right. Now that looks a little bit better. Okay. All right, so we're going to get the calculator out to find out what rate of return this actually is. All right, up, down, missed your call. Schedule from the site for today. Now, I did call someone today. I don't know who it was, but I called and I got, what do you call it? It just rang and there's no answer. So if you're going to leave me your number for me to call you, you actually had to answer the phone, because I remember it was at 11 o'clock. I called at 11:05 and just rang because I had no idea who it was I was calling. Okay. Is that your name, Up Down Trader? Okay. Was that you at 11 o'clock today? You should have answered your phone. All right. So we're going to take a look at the profit, $80, and then we're going to divide it by the investment to see what rate of return it's going to be. Okay, so the profit is $80. To find out your rate of return, you take the profit, which is $80, and you divide it by the cost of the trade, including commissions and fees, which is right here. Okay, so let's see what kind of rate of return this one is. Okay, is 62.20, and that comes to 1.3%. Now, it's always going to come back to that very last question is, do I like Nike? Okay, am I willing to put some of my own money into Nike? Hey, buddy, we're going to save this one. Okay. You going to press the button? Not that one, this one. There it is. And there it is right there. Let's get this thing out of the way. Get that out of the way. Oops. Now make it bigger. There we go. Nike. By one, covered call of Nike, 9 January, the 63 call. $80 is the profit. What is our investment? $62.20. So anytime you can have any type of return on anything you do, you have to put something into it first. So what we're doing here is we're creating weekly cash flowing assets. All right, buddy, get rid of all that crap. Okay, make it smaller, and we're going to put in the number 1.3. Isn't that only if it gets to the strike? Otherwise, it's less than? No, it's not. Say, Mike, what happens is when you buy the stock, you own it. You can do whatever you want with it. So once I own the stock, I can turn around and sell someone the option to buy it from me at a certain price by a certain date and collect the premium. Well, that premium is 8. Okay. Uh-oh, it's got to reset. You hit it too many times.
You did it too.
Yep, I did it too. Okay, so once you own the stock, you can do whatever you want. I see different premiums on Schwab. Okay, now depends. Hold on. It's been said. Hold on a second. Okay, I'm still talking with Mr. Mike. Okay, I'm going to get to your questions. Remember, I got 9 different platforms that we're streaming on. So yeah, it takes me a while to get to all the questions. But right at this moment, Mike is saying, okay, yeah, the strike price. If it hits the strike price, okay, more than likely the stock's going to be taken away from you if it hits the strike price. If it's below or above, what if the stock drops below strike? Cost and Astra, hold on a second. I will get to that question. So the premium I'm collecting, regardless what happens to the stock, it doesn't happen. Doesn't matter what happens to the stock. Once you own it, the stock option, the weekly stock. What, buddy?
We'll have to put points.
Now put it in. 1.3.
1.
1.3. So, where was I? Squirrel! Yes, I do get distracted easily. Okay. So once you own the stock, you can do anything you want with it. A weekly option expires on Friday. Every Friday, an option expires. Let me show you quickly. I'm not deflecting the question or anything. I am going to answer it. Just let me get here. Delete this. Get back to right here. Get back to right there. All right. And we're going to move this right to there. I'm going to close this out right here. Okay. Now, first and foremost, anytime you buy a stock, you can sell an option for someone to buy it from me. So the one we were looking at was 9 January. Okay, we got 2 January, which is this Friday. 9 January is next Friday. 16 January is 2 Fridays away. Then you got 23 January, 3 Fridays away. 30 January, 4 Fridays away, and so on and so forth. So as the time ticks away, the value of these options slowly decrease. So as a seller of the option, that's exactly what I want happening. Now, if I buy the stock, I sell somebody the right to buy it from me at a certain price by a certain date. So whichever comes first. Is that noise necessary? Just checking. If the stock goes up over the strike price, because remember the strike price I'm looking at is the 62. If it goes over 62, I got a couple options here that I can do. One, I can buy that option back, or I can push it into next week to collect more premium, or I can just let them take the stock away, which is perfectly fine because that's what I want to happen anyway. Okay, I like Nike. I will buy it. I will sell premiums against it. If someone takes it away from me, fine. I take
Look what happened if I drop.
Yeah, that's what's supposed to happen.
Why?
Why is that supposed to happen? Because that's what it's designed to do. All right, so now the question is, wait, can you continue to explain the answer? Yes, Cost and Astra, hold on a second. So once you own the stock, whatever you buy it for, see, at this moment in time, the stock price is $62.60. Okay, it's an after hours market right now. So the bid is $62.55 and the ask is $62.60. So whatever I buy it for, that is my entry price, and that will never change unless I dollar cost average, means buy some more to lower my cost basis. Well, great. But let's deal with the ones we're buying first. So if we buy it first thing in the morning, 62, okay, and I sell somebody the rights to buy it from me at the exact same price I paid for it, 62, okay, they pay me that premium, and that goes into my account ASAP. So I can spend that money this week. Then on Friday, okay, so we're looking at the 9th of January, okay, so the 9th of January, if the stock is above the strike price, I got two options. One, buy it back and keep the stock, which I don't want to do that. Okay, I want money coming in. I don't want money going out. Two, if it's above the strike price, the person who bought the option now buys the stock from me. So I get to collect the difference between the purchase price and the strike price, and I get to collect the premiums also. Now, if the stock drops below 62 by the 9th of January, I get to keep that premium, keep that money, and still keep the stock, and then roll it over and sell it to someone else the following week. So until the stock hits my strike price, I have options. I have choices. I can keep it, keep kicking the can down the road, and keep getting premiums every single week until I want to let it go. Or just let it go and take the money and then move on to the next. Because what's going to happen? Let's get this out of the way. So what's normally going to happen is the stock goes up, then it comes down. Then it goes up, then it comes down. Now it's going back up again. Okay, once it goes back up again, I want to collect my profits. And then when she's done going up and she comes back down, I'll buy it at the new bottom a week, 2 weeks from now. So I always like looking at the stocks that I like over and over again, depending on where they are. Okay, so let's pull this back a little bit. So as you can see, Nike, okay, she came down. Here's a perfect opportunity to buy. She goes up, I sell. Comes back down again, I buy. Goes back up, I sell. Down, buy, up, sell. So I'm constantly buying and selling the same stocks over and over and over again. So, option seller 1, 2, 3, 4. Why are you seeing different strike prices? Well, let's take a look. Okay, so at this moment in time, this is Charles Schwab's, what do you call it? Think or Swim, which is owned by Charles Schwab. So the 2 January call options are going for this price right here. Okay, the bid and the ask. All right, so you're saying you're seeing a different price on Chucky's. Okay, well, let's go to Chucky's and let's see what Chucky's saying. All right, so we're going to go to Chucky's and see what Chucky's saying about balance position summary trade right there. All right, so let's trade options. Okay. Now we want to take a look at Nike, NKE. Okay. Okay, the call option, Nike, 1, 2, right there, the 60 call, right there. Okay, so this is a Charles Schwab. Okay. Option seller, this is Charles Schwab right here. Wait, hold on a second. Can I say Nike stock, January 2nd, which is this coming Friday. The $62 call option, it has a bid of 18 and an ask of 22. All right, so let's check it out. Okay, so here we are. January 2nd, Nike, the 62, the bid, 18, the ask, 22. The exact same. So I don't know what you're looking at, but as you can see, hey buddy, hold on a second. Let's do this. Hold on. We're going to do this right here. Watch. We're going to do this. We're going to go up. All right. Hold on, buddy. Hold on. We're going to do this right there. Whoops. No. Right there. And we want to go right there. And we're going to do this. All right. And then, hold on. Okay, so sit tight. It's right here. All right, cut, stop. Okay, I gotta do one thing at a time, but I can't do two things at once. All right. Okay, whoops. The 62 call to January 1822. All right, so let's go back to Chucky, see what Chucky's saying. We do this thing all over again. Trade. Options. Wait a minute. Trade. Options. Okay. NKE. Okay. Okay, the 62 call right there. Okay. Sit tight. Whoops. Bum, 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 bum. All right, so we want to go over here. And we want to go right there. All right, hold up, buddy. All right, so I'm going to show you right here. All right, here it is right here. Okay. Where is it? Where? Right here. January 2, 2026. The bid 18. The ask 22. So 22, 22. Exact same. 18, 18. Exact same. January 2nd. January 2nd. Exact same. The 62 call option. The 62 call option. I don't know what you're seeing, but I'm seeing the exact same thing on Think or Swim and on Charles Schwab. So I don't know where you were looking, but on both of them, the numbers are the exact same. See, hey, we got more people saying hi. Listen, can you clean this up? Right there, little arrow right there. There you go. Keep going. Keep cleaning it up. All right, so he's cleaning that up. So option seller 1, 2, 3, 4, you said you're seeing different premiums on Charles Schwab. Are you looking at the exact same thing? The January 2nd, the 62 call option. All right, great. It's all done. Thank you, buddy. Nicely done. Can I get one of those? Cool beans. All right, so what do we have next? Oh, so Costanastra. Did that answer the question? Let's keep on going. What else? Oops. Can you explain the answer? Okay. What if it drops below the strike price? So you remember rule 1, never buy something you don't want to hold on to long term. If the stock drops, it drops. I mean, they do two things. That's all they do. They go up and then they go down. And then they go up and then they go down. That's all they do. So as the stock's going up, I want to ride the wave. And once I get that profit, I want to jump out and wait for it to bottom out before I jump back in again. Next question. Dr. Dev's in the house. Hey, buddy. Dr. Dev's here. Say hi to Dr. Dev.
Hi, Dr. Dev. You may pray.
All right.
Oh, I'm tired. My tummy hurts.
You're tired. Your tummy hurts. K-Van's in the house. K-Van, how you doing? It's Ben. Hello. Uh-oh, and Mr. Unemployed. You done, buddy?
Yeah.
Okay, wait. Did you put the pen back? Okay.
Yeah.
Okay, good night. Be quiet. All right. Well, I lost my helper. Can't only get his attention. He's 5 years old. What's his attention span? 15 minutes? Well, actually, we got his attention for 30 minutes. Not that he was actually paying attention. Morty, how you doing? Chief, how you doing? Kenny. All right, so Costanastra, did that answer your question? Stevie, how you doing? Isn't that only if it gets to the strike price? No, Mike. Anytime you sell an option against the position you own, you get that premium instantaneously. You might have to hold it for a day before you can spend it, but it goes to your account right away. You don't have to wait for the stock to be sold. Okay, what else do we got? The premium for the 63 is 39 cents. Okay, I see that, but I wasn't looking at the 63. I was looking at the 62. All right, so 63. That's this week's. We don't want this week's. We want next week's. Okay. Okay, it's currently at 62.60. The 62 is going for 64. The 63 is going for 36. Well, let's go look at next week, which would be the 16th. Okay, the 62 is going for 107. The 62 and a half is going for 89. The 63 is going for 73. So it all depends on how much time and effort you want to put in. More time and effort, more money you're going to make. Well, me, I only want to be in for 10 minutes. See, I have no problem sitting here with you guys and helping you out. But it would be nice if you understand where I'm coming from. Simple, safe, predictable, consistent, no way for me to lose, and I only want to be here for 10 minutes a day. That's all I want. You want to spend more time? Yeah, you're probably going to make more money than me. But here's the thing. I don't care. I make enough. Okay? Bears make money. Bulls make money. Pigs get slaughtered. So if you're wondering why you keep losing, that could be it. His handwriting is very good. Thank you. Yep, I'm seeing 39. Thank you, option seller. You're seeing 39. For which one, though? You got to remember, where are we? For the 62, I'm getting 64, and the 63, I'm getting 36. Okay? The number keeps changing no matter where you're looking. Oh, it should be the same, I should say. Okay, Dow is looking good for next week. Jake, let's take a look at Dow. Let's get rid of this. Let's go back over here. Put in Dow and see what Dow looks like. So Dow does look good for next week. Here's the top. Here's the bottom. Now, we got a triple bottom here. Once, twice, three times. That's what you call some pretty good support. Okay, your resistance is up here, which there isn't any resistance, but your support is down here. Doesn't want to go below 20. Here, not below 20, not below 20, not below 20, but it's bouncing up right there. So I like that. The up, down, sideways, down, sideways. What was that? What are you doing? What?
How do you change it?
Change what? No, you don't. Go put those back.
How do you change
Go, I will change it when I come in. Go put those back. Thank you. All right, sorry about that. Schwab and TOS show different premiums. Do I have to do this again? Seriously, January 9 premium, not January 2. Okay, so let's go. Again. Okay. This is Dow. Now, which one are we talking about? Are we talking about Dow or are we talking about Nike? Option seller. Okay. Currently, 2351. The 2350, 5664. Let's zoom into it. Okay, hold tight. Where is it? There it is. Okay. January 9, 2026. The 2350, 5664. Now let's go to Chucky and see what Chucky's saying. Okay, now we're going to do Dow. DOW. Okay. Stock ETF. Options. Where is it? Sell to open. Okay, and I want the 2350. Have I mentioned that I really dislike this? I do. Dow, D-O-W. 2350. Okay. I forgot to do that. Sorry, guys. Okay. Charles Schwab, Dow, call option, Dow. Whoops, we want the 9th. We don't want the 2nd. So let's change that to January 9. There it is. All right. So let's do this. Right there. Right there. Oh. Give me a second. There it is right there. All right. Option seller 1, 2, 3, 4. Are you ready? I just grabbed this from Thinkorswim. 9 January, 56 by 64, the 2350. This is from Chucky's, Charles Schwab, Dow, 1, 9, which is 9 January, the exact same. The 20, what the hell is that one? Okay. The 20, no, 9, whoops. Right. 2350, it is the 2350. The bid, 56. 56, the exact same. The ask, 64, the exact same. So I don't know what it is you're looking at. Okay, you said Charles Schwab and TOS show different premiums. Are you buying or are you selling? Okay, I'm selling options. So the bid, 56, the bid, 56. The ask, 64, the ask, 64. January 9, January 9. The 2350, the 2350. So I'm not quite sure what you're looking at. Okay, yeah, January 9, right there. Okay, 010926. Same thing, 09 January 26. So I don't know what you're looking at. Because whatever you're looking at is different than what I'm looking at. But what I'm looking at, Thinkorswim, Charles Schwab. The numbers are the exact same. So I don't know what you're looking at. So let's get rid of this crap. It's going to reset. I hate that. All right, so let's keep on going. Let's bypass that one because apparently she's not looking at the same thing. Up. Lay, do you recommend watching your preferred stock for 2 weeks before entering? No. What I'm looking at is good quality stocks. Good quality stocks. Okay? These are companies that are consistently profitable for at least 2 decades. Most of the companies I look at are the dividend kings, dividend aristocrats, dividend champions, and dividend contenders. And then whatever's on Warren Buffett's list. There we go. Back to where we started again. All right, so hopefully that makes sense. Okay, dividend kings, 5 decades. That's 50 years of increased profits. Think about it. If you're going to put your money into a company, okay, depending on where you are in life, I'm 62. Well, I'm going to be 62 in 3 weeks. Yeah, 3 weeks. So I'm retired. So I'm not looking for my money to grow exponentially. I'm looking for it to stay the same, but give me cash flow on a weekly basis. Who tests your patience more than a 5-year-old? Thank you, Juna. Thank you. So anyway, my suggestion, this is my suggestion. Anytime somebody wants to ask me about, hey, I'm thinking about investing in the stock market. Well, my suggestion is paper trade for a while. Now, I'm going to be 62 shortly. I've been investing for over 30 years, 3 decades. Yes, and I still paper trade. So you look at this down here. All right? Why is that not popping up? There it is right there. Okay, this is a live account. This right here is a paper trading account. Now I get 7 accounts. Okay, I got this paper trading account, which I use to do new ideas and whatnot. And I got 6 accounts that are live real accounts. Because, you know, I don't trust the government. I don't trust anyone. Anyway, so that being said, DeMarcy, new core, the strike of 25 with expiration this Friday. It looks tempting. Well, let's take a look at it. Let's get back out of Chucky. Unless, what do you call it? Option trader wants to question me again. So we're going to take a look at NU, which is, I believe it's Nucor. No, NU Holdings. Okay. So here we are with NU. Okay, here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at the motion. Up, down, up, down, up, down, up. Okay, what's going on there? I want to zoom in. No, it's not Nucor. Yeah, I saw that one. So we'll zoom in a little closer. Here's our last 30 days. Last 30 days gives me a good idea. 30 days ago, we're at 1780. Then we dropped down to 1560. Now we're up over 17. That's a nice little move right there. That's $2. Well, $2 on a $15 stock is over, what, 12%? 49 wins, 39 losses. Congrats. That was last year, I think, or the year before. That was in 2022. Yeah. So 49 weeks. Yeah. What he's saying is, Pete, yeah, there's 52 weeks in the year. So 49 of those weeks, I made over 1%. There's only 3 weeks I didn't make my 1%, which is okay. Keep on going. Okay, so here's the movement here. 1688, the closest number is going to be the 17, and the 17's trading at 21. Well, that's a nice little number. Let's take a look at that. And Costin Astro wants to take a look at SoFi. We'll take a look at that in a bit. This one here, let's get out of there. Let's do this right there. Covered stock. And we want to do the at the money, which will be 17, because the stock price right now is $16.94. So if I'm buying it at $16.94, okay, I want to sell it to someone else for almost the exact same price I paid for it, because I really don't care about the stock itself, other than the fact that it is increasing and it keeps giving higher and higher profits year after year. Okay, hold on. I'm not disregarding the questions. Just hold on. I'll get to those. So if I'm going to do the 17, let's see what it looks like. So let's do just one contract and at the market. And here's what it should look like and what it should sound like by one covered call. NU 9 January 26. That's not this Friday. That's next Friday. Because we only got 2 days left for this week, which means 2 days left this week. How much can I really collect? So 46 is the profit. 1,600 is my investment. Anytime you want some kind of rate of return, whether it's your time, whether it's your money, or whether it's a relationship, whatever, you got to put something in order to get something out. So what I'm doing is I'm creating weekly cash flowing assets. We had a big discussion about this morning on the morning trading group. Now I do have a morning trading group. It is a paid service. I always tell people, those who pay attention, and those who pay more attention. But I'm not going to try to sell you anything here. I'm just telling you that I have it available. We're all adults. We know how it works. So if I'm buying it at $16.94 and I'm going to sell it at 17, my profit's going to be $46 per contract. Okay, so we're having a conversation this morning because one of the gentlemen bought SMR at like $20. Now it's down at 10. It's like 50% drop. And I said, why are you looking at the price? Remember rule 1, never buy something you don't want to hold on to. Rule 2, never sell at a loss. Okay, so he's got 400 shares. 400 shares, and they dropped 50%. Did they really? Think about it. The stock price dropped 50%, but he still has 400 shares, which is 4 contracts. So it doesn't matter what the value of the stock goes up or down. You have 4 contracts, which means you can sell options. Let me get rid of this for a second. When you have 4 contracts, okay, with 4 contracts, I can sell 4 of these, I can sell 4 of those, I can sell 4 of those, I can sell 4 of these. Okay, as long as I never sell for less than what I paid for it, I have the ability to sell something and collect something on these 4 contracts every single week. So do I really pay attention to what the stock is doing? Yeah, I do. I'm not going to say no, because I buy it at a certain price. If I buy this one tomorrow morning, $16.94, I'm going to sell it at $17. Now, to make a whopping, what is that, 6 cents, the difference? But that's not what I'm looking for. I'm not looking for the difference of the stock and the sale price. That's not what I'm looking for. What I'm looking for is this right here, the premium. What am I collecting? What cash flow am I bringing in? Because if I sell somebody the rights to buy it from me at 17, I collect 21 cents per share or $21 per contract. And if I get 4 contracts, that's $84 per week. All right, so let's keep doing this. Let's do that 17 right there. No, sorry, back there. 17 right there. 1 contract. Market. Here we go. Okay, so buy 1 covered call NU 9 January, which is next Friday. The 17 call option. So I'm buying it at $16.94, selling it at $17. My contract is giving me $44 per contract. So what rate of return is that? Okay. Calculator. 44. We're going to divide it by the cost of the trade, including commissions and fees. Cost of the trade, including commissions and fees. 1656 is 2.6%. Now, we all know that 1% a week is 50% per year. Well, 2.6% per week, let's multiply this by 52. See what that comes to. 138% for 1 year. If, and only if, you like this company. Remember rule 1? Never buy something you don't want to hold on to. Okay, so if you don't like NU, don't buy it. It's actually that simple. And somebody asked earlier, how do you pick your stocks? Well, Dividend Kings, 5 decades of increased profits. Dividend Aristocrats, 25 years of increased profits. Dividend Contenders, same thing. Wait a minute. Dividend Champions, 25 years, increased profits. Dividend Contenders, 10 to 20 years, increased profits. Those are the only ones that I look at. That's about 300 companies. Well, whatever's on Warren Buffett's list also. Now, I'm going to call it quits early tonight because my little buddy's got to go to bed early and I can't leave him alone. Well, he's with Julie, so that's not a big deal. Constant Astra. Let's wait a minute. Let's save this one. This one looks pretty good. Okay, and that was 1.38. Where is she? There she is. There we go. 1 covered call NU, 9 January. The 17 call option, $44 is the profit, $16.56 is the investment. That is a 2.6% for 1.5 weeks. Next Friday. Now, it may not sound like a lot, and it's kind of not a lot, but I'm not looking for a lot. I'm looking for consistency and profitability. The stock market's been around for 400 years. The companies that I look at are at least a bare minimum of 20 years old. That's 2 decades. At least 20 years old. And they're consistently profitable for at least 2 decades. So, I like that one. So, let's get rid of this one. I hate it does that. All right, next. Okay, what do we have here? Okay, Constant Astra wants to take a look at SoFi. Now, you do know that SoFi is not on my list, but I'll take a look at it anyway. Do I like blocks? Pete, what the heck is blocks? BOLX. And what did we say this one is? 2.4? 2.6. 2.6. That's not that bad if you think about it. 2.6. That's a good thing. But if it goes down 50%, what other strikes are you choosing and not losing money? I say, see, Constant Astra, yeah, he's talking about SMR. Yeah, it dropped 50%. Yeah, so did mine. But here's the thing. Hold on. Let's see if I, where is my SMR? SMR. Where is it? I'm trying to figure out where do I have SMR. That's where it is. SMR right here. Whoops, let's do this. Okay, so here's SMR. Ready, Constant Astra? This is my actual position in in this one. SMR. Okay, here's the high. Here's the low. Here's where it was. Here's where, look at the motion. Up, down, up, down, up, down. We're at 1431. Okay? You think you got it bad. I originally got this thing at 42.47. 42.47 is my entry price. Okay, right now it's at 14. Okay, I hate to be the bearer of bad news, but that's more than a 50% drop. Did I sell? No, I didn't sell. Okay, so I'm in it at 42, and I sold this week's, wait a minute, 30 January. I sold some 30 January, and I sold some 6 February. Did I really? Oh, all right. I sold some 31s, and I sold some 38s. A lot lower than what I had it, because right now it's here. I'm in at 42. 42 is way up here. Okay, that's 42. That's where I'm in at. Now it's down here. Am I panicking? No. Hold on a second. Let's do this. Let's get this out of the way. Let's go monitor, account statement, SMR, and trade history. SMR, trade history. Okay, here it is right there. Okay, Constant Astra, you seen this? Okay, I originally bought it October 6th. See that? Okay, 500 shares, SMR at 42.47. Okay, and I sold the 42s, picked up 233, and then 1 week later, I picked up 250. Next week, 120, 64, 125, 86. This is how long I've had this thing. Every one of these is 1 week. Okay, every week I push it forward. So originally 42, well now I'm at 18. I sold this week's 18 calls. I still own 400 shares. And I'm still bringing in what is 26 times 5. 26 5. It's $125 just to own the stock. Okay, so if I counted up each one of these, that'll give me the cash flow from these 500 shares that I own. As long as I never ever sell at a loss, I always have money come in. So are you just rolling? Absolutely. I'm rolling every single week. See, first week I pick up 233. That was nice. 233 times 500, that's over $1,000 right there. Very first week, over $1,000. Second week, 250, over $1,000. Third week, over $1,000. Fourth week, $600. Okay, then it went to 250, then back to 600, then so on and so forth. I never want to sell for less than what I paid for it. What did I pay for it? $42.47. What strike price did I sell this week? The 18 call. See, it was at 42, then it went to 43, then it went to 36, then it went to 21, and then now it's at 18. I'll keep dropping it. I'll keep bringing that money in. And I look at it twice a day. Once in the morning in my live paid group, Okay, it's a very good investment. You guys get to watch and ask questions. I actually get to watch what you're doing and guide you. I can't tell you what to do, but I can guide you. Okay, so Cost and Astra. What do you think? 42? And I sold the 18s? That's more than 50%, brother. Okay, am I panicking? No. If I didn't like the company, I wouldn't have bought it in the first place. Okay, rule number 2, never sell at a loss. I have no intention of selling at a loss. Let's get this thing out of here. All right, that being said, let's go to the next one. Hope that answered that question. Yes, I am rolling. Okay, what do we got? But either way, the main objective is covered call. Yeah, absolutely. Can you show your returns for this year? Dustin, why should I show you the returns for the year? It either makes sense to you or it doesn't. Okay? Let's take a look at this for a second, Dustin. Let's go back to here. To here. And let's go to, okay, what we're doing next is we're going to take a look at all the trades from this year. Okay, so all my trades, weekly trades 2025. Remember I said I share 3 accounts publicly? Account number 3, account number 2, and account number 1. Okay, come all the way down to the bottom. Whoops. Okay, right there, week 1, December 30th, January 3rd. Okay, 4.2, 1.8, 6.1, 2.3, 1.7, 1.8. You can look all you want. I share all my trades on these 3 accounts. I'm not going to show you all 7. I'll show you 3 of them. You can take your pick which ones you want to look at. Next question. That's really helpful. I'm in that situation on a few and was freaking out. Number 1, don't freak out. Okay? Never buy something you don't want to hold on to long term. If you don't even take into consideration the stock price. If you don't think the company is run well enough for you to put your hard-earned money into, don't do it. Rule 1, it's a simple rule. Rule 1, never buy something you don't want to hold on to long term. Rule 2, never sell at a loss. If you paid attention to rule 1, rule 2 shouldn't even be a consideration. Is the company consistently increasing in their profits? They either are or they aren't. Are they consistently giving you something every single week? And are you collecting a dividend? See, that's the reason why I like dividend stocks, because the dividend stocks that I like, the kings, the aristocrats, the champions, contenders, they consistently increase their profits year after year after year. That's the only reason why I buy them. Because when the stock does drop, and the one that I like did drop, it went from 42 down to 14. I'm still collecting dividends, and the dividends are consistently increasing every year. The premium is nice. It's like an added bonus. So what are you looking for? Are you looking for just the dividends, or are you looking for the dividends and the premiums? Anyway, DeMarcy, even expiring on January 2, new has good premiums. All right, well, let's go back to new. I forget. Oh, we already looked at that one. Okay, we already looked at that one. Let's go to the next one. JMF, thank you, thank you, thank you. Just rolling, absolutely. Okay, so we seem to be out of questions. What do we have down here? How about a daily chart on Google? Why would I want a daily chart on Google? Now, only people that trade on a daily basis, day traders, want to take a look at daily charts. I'm not a day trader, okay? So why would I be spending my time looking at a day trade on Google? And Google only has 2 years of dividends. Okay, I'm 61. I'm going to be 62 soon. I don't have the luxury of being wrong. Look at Google. Okay, it was at 140 back in April. It shot up to 320. It dropped. Now it's back up again. Great. Why? Why are we looking at SMR is not is not profitable and no dividends. Thank you, up, down. Yeah, where were you when I bought it? Anyway, I forget why I bought it or when I bought it, because I bought it back in October, and there was a reason why. Do you look at the 15-minute chart for weekly stocks? No, I don't. I look at the 1-year chart. See, the 1-year chart will give me the high of the year, the low of the year, where it was a year ago, where it is now, and an overall flow of capital. Okay, it went up, it went down. Here's the bottom right here when everybody panicked back in April. Then it shot up from 140 to 320. And you got some people saying, oh, hell no, this ain't worth more than 320, because if it was, it would have kept on going. So at 320, it comes back down to 300. Now she's back at 314. What are you looking for? I'm not looking for the stock that I buy to go up. I'm not looking for that. I'm looking for weekly cash flow. And no, I don't look at the 15-minute chart. I look at the 1-year chart. Gives me an idea where it's going. From there, I go to the 90-day chart. The 90-day chart shows me a pattern. What's the pattern? Up, down, 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 up, down. It's the pattern is like every 2 weeks. Okay? So as the stock moves every 2 weeks, I want to be in the best position to get the optimum profit. What are we doing? Right there. Right, there we go. Okay? So no, I don't look at the 15-minute chart. Hold on. That's the 90-day chart. I look for patterns on the 90-day chart. Then the 30-day chart. The 30-day chart gives me an idea of where do I think it's going next. Okay, so 30 days ago, we're at 316. Jumped up to 324. Dropped. Here's your profit taking right there. Okay, when the profit taking is done, turns on, goes back up. Profit taking again. Now it looks like it's going back up again. If you like Google, which I don't. Yeah, who farted? I see that. SMR is no dividends. I get that. Every once in a while, I'll have an investor call me up and say, hey, James, I like this. Can you buy it? So, yeah, I buy it. Okay, that makes sense? Arthur, how you doing? Okay, what else we have? I've done too many like that, so I'm not one that should talk. Thank you, up, down. I meant to trade. Well, Lex, I do trade. I trade on a weekly basis. I'm looking for something different than what you're looking for. You got to remember where I'm coming from. Okay? I don't have the luxury of being wrong. I'm looking for simple, safe, predictable, and consistent. Google only has 2 years of dividends. That's not enough for me. Okay? Take a look at Home Depot. 5 decades of increased profits. Yeah, that's on my list. Okay? Apple, not on my list, but it's on Warren Buffett's list. Okay? Google, Costa Nostra, I'm in the same boat. Yeah, Mike Sweeney. All right, Mike, hey, it happens. Why did you buy SMR in the first place? You either like the company or you don't. Okay, if you like the company, great, buy it. If you don't buy it. If it makes sense, great. But still, Mike, I'm going to same thing I told Costa Nostra. Okay? Mine is mine is more than a 50% drop. I jumped in at 42, now it's down to 14. That's more than a 50% drop. But I have no intention whatsoever on selling at a loss. I'll collect the dividend and I'll continue to collect the premiums every single week. I feel a lot better now that he explained it like this. I was scared to sell a covered call. Okay, if you're going to sell a covered call on that, under my cost basis, but he said you can roll it. Yes, you do. But here's the thing. Let's go back to it. Which one was it again? SMR. Okay. Here's the big drop. And it keeps going down. Eventually, it will find a bottom. So at 14.30, okay, I'd be looking at what? I sold the 18s this week. Okay, so the 18s is not even on here. So let's go to 12. There's the 18s right there. Okay, so this week I sold the 18s. But the 18s is right here. Let's zoom in a little closer. All right, so we're here right now, 14.30. The 18 is not even on this chart. That's how much room I have to play with mine. Okay, so next week, diversification will help, 5% maximum per position. Okay, Dev, 5% maximum per position, that'd be like 20 positions. I do 8 positions, and I go like 15 to 20% in each position. That's because you moved. That's why you didn't like that. Okay, so next week, if this thing stays right where it is, I might do the 16s of the 1650s or the 17s. Okay, because the 16s are paying 26, but the 16s are right there. Do I think it can hit 16 by next week? It's either yes or a no. And if I don't like that, maybe I'll go up to the 17s. Well, the 17s, yeah, it's not the greatest in the world. I might get 10 cents a share. But remember, some money coming in, yeah, 20% positions is good too. Yeah, because I'm a weekly trader. I buy, I sell, I buy, I sell. I don't hold on to anything for a long term. The longest I've ever held on to anything was 18 months. And I believe that was Walgreens before they got bought out. But Walgreens paid me 2 to 3% every single week for like 2 years. Then they finally got bought out, and then we had to abandon that one. All right, what else we got? Okay, so you guys are done with questions, so I'm going to call it an early day because I got to go hang out with my grandson, make sure he's okay. We'll basically do the same thing again tomorrow. All right, wait a minute. How are we going to do it tomorrow? Wait a minute. Tomorrow's New Year's Eve. I might. Walgreens. Yeah, Dr. Dev, did you do Walgreens too? Sammy, how are you? Okay. You can thank them for the support, invite them to join your fan club by sending a heart me to your life. Oh, that's cool. So you just don't allow it to get assigned because it's under your cost basis. Yeah, cost and Astro. If you're concerned about it, go like this. It's really easy. You take your cursor, put it right there, right. Okay? Create an alert right there. I sold the 18s. So what I want to do is I'm going to change this right here. Say when the stock hits, let's say 17, let's change to 17. Okay, so when the stock hits 17, I'm going to get a sound to my computer, I'm going to get an email, and I'm going to get a text to my phone. And I just hit create right there. That's it. So if I don't have my computer on, fine, they'll send me an email. If I'm not paying attention to my email, well, fine, they'll send me a text to my phone. If I'm not doing that, well, that's 3 strikes, you're out. So if you're going to play the game, make sure you have the support behind you. No buy and hold at all. Yeah, I don't buy and hold at all. Crypto taking over, Professor. No, crypto is not taking over. Okay, you might think it is, but it's not yet. Okay, now different parts of the world, a lot of crypto is catching on, and yeah, I think, holy crap, tomorrow's the last day of the year, which means I'm actually going to do my own crypto tomorrow because I want to end by the end of the year, which is tomorrow. All right, so if you want to have that conversation, we will. I'm actually creating my own crypto. Wait a second. Here it is right here. Here it is right there. That's my own crypto right there. Okay? That's my own crypto. Okay, now I'm not buying and selling. I'm not a trader of crypto, but I do have my own crypto. Look at the above message. What is the above message? Awesome. You didn't expect that. Nice coin. You like that? Well, see, the reason why I'm doing my own crypto, number one, I don't trust the federal government at all because they're switching all your cash to a digital asset, which means they can control your money. Your money. If you have cash in an account somewhere, it is going to be converted to digital. And if you don't do what they want you to do, they can just hit a button. And they did it to the truck drivers in Canada. Okay, they were When I lower the strike, I look at the delta and try to keep it above 20. Okay. No technical issues today. A win for me. All right, Dev. Okay. So as I was saying about the crypto, the reason I'm doing my own is I want to control my own money. So when I get paid in cash. Some people pay me in gold and silver. Okay, fine. But when I get paid, I take that and I convert it into my own cryptocurrency. Now, this particular this one is actually attached to Solana. So we're also going to have some attached to Bitcoin and some attached to, what is that other one? But I'm only doing it for my own self. Okay, so when I get paid, it gets transferred into crypto. That means I can do whatever I want. The federal government can't touch my money. XRP, I might do XRP. I'm not 100% sure. Okay, I haven't quite figured that one out. But I am going to do Solana first because it's the simplest and the easiest and to get me in the door. And then all I have to do is go from the beginning, because there's two stages with cryptocurrency. One is the primary market and one's the secondary market. So the secondary market is a very small amount of people can get in on. But the primary market, anybody in the world can buy. But you can't get to the primary market until at least $60,000 worth of cash flows through the coin. Well, I could do that in a month. That's not a big deal. So that being said, it's my own crypto. And as my own crypto, I get to get it at the absolute lowest price possible. And no, I'm not going to release it all at once. I'm going to release, just like they did with Bitcoin, I'm going to release a couple 100,000 and a couple hundred, I think every month we'll probably release 100,000 every single month until we get up to the 2 million. 20 million. The same people who run the stock market run cryptocurrency. Nope, not true at all. Okay, cryptocurrency is a relatively new entity. The stock market's been around for over 400 years. 400 years. Cryptocurrency is not even 10, 20 years old yet. So it's got a long way to go. And cryptocurrency is still available in other parts of the world. And other parts of the world aren't controlled by the people here. So it's two totally different things. But what I don't like about crypto is nothing behind it. Why am I talking about this? No crypto. Let's get back to what we were doing. Okay. But when it's released, I'll let you guys know in case you want some. But here is my QR code in case you want to take a look at the stuff that I have. Blah, 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 blah. Let me get out of your way so you can see it. Take a picture of that, take you to all the websites, everything that I have. And next year, in 2020, actually it's next week, we're going to be changing things up a little bit because we're starting our own fund, which I guarantee people 20% returns. If for those who don't want to do trading, you just want 20%, fine. Do it that way. But do your research. Make sure you know where your money is going. Anyone who has a phone can get Bitcoin. Yeah, I'm aware of that. Happy New Year. What did they do to the truck drivers in Canada? Oh, you don't remember that? A couple of years ago, remember the jabby thing? People said, no, I'm not doing that. So they started a protest in Canada. And what did the Canadian government do? They went behind their backs and they froze their accounts because their accounts were digital. So now that the U.S. government is going to have a digital account, guess what? Your money is all digital. And guess what? If you have an electric car or a new car, new cars are being tracked, so you are where you're going. So if you do something they don't like, they can just tap into the computer and turn your car off and lock you in your car. They can also turn off your money, and then you have no access to any of your money. So you got to be leery of what you're doing, because it reminds me of a Star Wars. Your Star Wars, you'd have the Empire, okay, which is the government trying to make us do what they want us to do. And then you have the rebels. No, you can't tell me what to do. I'm going to do my own thing. Yeah, so I'm going between the two, floating between the two, because I got to live in that world. You like that one, Juna? Yeah. Read the news. Say, why is all the crap in the news? It's there specifically to distract you to exactly what they're doing. They don't want you to know that. Anyway, I'm out of here for tonight. Tomorrow night, we're going to do the same thing. It might be a little bit shorter because it is New Year's Eve. To me, it's just a Wednesday. I really don't care. I'm not one of those big on holidays. All right. That being said, you guys have a great night, and we'll catch you all tomorrow. Let's get this out of here. And now, The end is... Oh, I got one question. Oh, what is my crypto called? It's called G. Like a G spot. Okay, throw me a couple G's. You like that? Throw me a couple of G's. GEI, Gardino Enterprises Incorporated. GEI, Papa G. That's my name, Papa G. So the boat, which is going to be kind of cool. And for those of you guys don't know, we're buying a big ass boat and we're going to take it up the East Coast. And I don't know if we're going to be able to go do the what do you call it? The Great Loop on the big boat. So we might have to use the smaller boat. When I say smaller boat, it's like 44 foot. It's like, we'll have to take the smaller boat. It's only 44. The big one, yeah, I'm not quite sure how that's going to work. Could you please just move aside so I can get the QR code? There you go. James, you're the best. Thanks. I'm so excited to hear about your fund that you're creating. Can you talk more about that? Jewel Grayman. Oh. Pokey, well deserved, thank you. So the fund, basically, it's going to be a non-regulated fund, and it's going to be a private fund. So you actually have to know someone that actually has the shares so you can be able to buy the shares. Because a private company can't advertise, which is this would be advertised, so you can't do that. So as a private company, you can only buy it from... and you would need an introduction. So I can't sell it to somebody that I don't know. So let's say KJ over here, who's a member. KJ says, hey, I got a friend of mine, Tom, who wants to buy something. Great, not a problem. I could sell that way because it's an acquaintance of KJ's because KJ is a member. So yeah, members can buy it and members can have their friends buy it. It's kind of weird, but I don't like the federal government and I like to create my life in the gray zone. You know, people say, hey, it's black and white. No. There's a gray zone. There is. I don't want to do things illegal. Okay? I don't want to do anything illegal. I like skirting right down that line. Well, this is the law. Well, yeah, but it is what it is. The law says I can do this. So that's exactly what I'm going to do. A private company can raise as much money as they possibly want. And as a corporation can sell bonds and guarantee a certain rate of return. That's exactly what I'm doing. Okay, investing in the company, fine. We'll guarantee you a 20% return. All right, Lloyd, thank you. You're welcome. Cabbage dabafoo. What the heck does that mean? Cabbage dabafoo. I have no idea what that means. Okay, something of value. You're welcome. Junit, yikes. Dr. Dev, have a good night. Cost and Astra. I will take a look at doing a cryptocurrency with XRP. But at the moment, the very first one we're going to do is going to be with Solana. Anyway, that being said, you guys have a great night. And we will be we'll be doing this all again tomorrow. Remember, the new year starts Friday. Because stock market's not open on Thursday, but Friday is going to be the very first day of the year, which means, you see this right? Whoops, wait. Where's my pen? All right. See all this stuff right here? All that is going to be reset down to 0. So the amount, liquidation value, that will stay the same. But profit and loss year to date is going to go back to 0 on Friday. So if you can do some calculations, make sure you download whatever you need to download tomorrow. Because Thursday and Friday, it all gets erased because a new year. A new year, you start at 0 every year. Okay, that being said, you guys have a great night. Let's pull that back up for those who want to take a gander at that. Go from there. Okay, so you guys over here, have a great night, and we'll see you again tomorrow. We'll see you tomorrow. All right, guys, have a great day. And that one's done. Bye, y'all. Down here, you guys have a great day. And over here, and you gotta turn all the cameras off one at a time. Done, and that one. Done. Done. All right, so down here, you guys, catch you guys later. Good night, all. Thank you, thank you, thank you, thank you, thank you, thank you. And we'll see you all again tomorrow night.